This is Eat, Sleep, Invest, the marketing podcast for real estate investors to get more deals. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Bryan Driscoll, and I'm here with Mike Hambright. What's going on, Mike?
Hey, man. Glad to be here. Good to see you.
Yeah, I'm glad you're on, dude. There's a lot we can talk about.
Yeah, for sure.
So everyone listening, Mike's involved with a lot of stuff. Real estate investing, marketing, networking. So, Mike, tell us a little bit about your background there.
Yeah, it's funny. I always laugh when I hear that question because I used to say, I'm a real estate investor. Like when people say, what do you do? I'm a real estate investor. It's a little more complicated now, but I am a real estate investor, started as a real estate investor, I guess, post-corporate life, if you will. 2008, started basically just fix and flipping, wholesaling properties in the Dallas market, and have done several hundred properties here. That evolved over time to where I do actually a lot more in large multifamily syndications now. Still have a rental portfolio here. We're still rehabbing houses all the time because I've got turnover with, I've got a fire. I just had a fire at one of my rentals. So we're rehabbing a fire damaged house that just happened to be mine. Right. So always dealing with that stuff. And then along the lines, I've started to do a lot of other things. I guess a couple of years into real estate investing, I started, keeping rentals, right? So I guess probably 2009 or 10, we started to keep some of our houses, which is same reason, you got into real estate investing is you wanted to keep some as rentals and build wealth, right? And so for us, we wanted to keep some. So next thing you know, we're in the rental business, go forward a year. And next thing you know, I'm in the coaching business because people were asking if I could teach them what I know and stuff. And that just evolved over time to where I guess about 5 years ago, started Investor Fuel Mastermind, which you're a member of. And that's a community of a couple hundred just amazing real estate investors around the country. And then a few years ago, started The Investor Machine, which is a lead gen agency, but not digital like what you do, more offline. So we use some sophisticated data techniques and then kind of have done for you direct mail and skip tracing for folks. So, but it's every single thing has been like, you're going down a path and I see a problem or I keep hearing of a problem and I'm like, I'm going to try to tackle that one. Like, let's do that. I could do that. Right. And so it wasn't, I can't look at the last 14 years of my life since I started in real estate investing and say, that's the path that I always knew was going to happen, at all. Right. It just went forward one step at a time and all of a sudden an opportunity happened or something bad happened and you just pivot. Right. And you just kind of find your way forward.
Yeah, that's all. We got a lot to talk about here.
Yeah,
a lot of stuff. And you know what?
This is chapter
right.
1.
Right. Yeah, chapter 1. And you're right too, because whenever opportunities pop up, as long as you're prepared to be able to take. That's an important thing too. Position yourself so when an opportunity pops up, you can grab it.
Yeah.
Yeah.
I've said that before. We're ultimately, a lot of us that are in real estate investing are in the opportunity business. I mean, you've seen a lot of people over the past year or two jump into crypto or other things, right? And it's just, there's nothing wrong with that. I think some people quit before they really give something a good chance, or whenever something gets hard, they get shiny objects in them and jump into something. And I can't say I'm not guilty of some of those things as well. But, I think ultimately we're in the opportunity business as entrepreneurs. And sometimes opportunities that you were working before dry up. Sometimes you outgrow them and you want something bigger, and there's just a lot of reasons why we sometimes move on. But I think at the end of the day, you should always be open to just constantly observing, where are the opportunities here to grow what I'm doing, have an impact, change the world, improve my family situation, my financial situation, whatever it is. Right.
Yeah. That's so, you know what? It popped up a question in my head then. So shiny object syndrome, right? How do you determine what opportunities you go after and which ones are that's too risky? Or you're just like, hey, that's too shiny. It's just oh yeah, they're getting you hyped up, but it's not a real opportunity.
Yeah. Some of it is, some of it for me, and I'm attracted to a lot of shiny objects for sure. I've gotten better at waiting them out. So what I typically do, I used to come up with an idea and it would drive my wife crazy because she's more of the implementer in our business, or historically has been. So I've had to get better at implementing because, she would basically say, hey, you're throwing your shit over the fence for me to clean up your messes all the time. That's not fun. And so some of it was to, not damage my relationship with my wife. Some of it was just business maturity of that sounds interesting. Let me write down some ideas. I fill up like journals full of ideas and thoughts and how would I do this or whatever. And sometimes what you find out is if you actually write them down and you let it simmer for a couple of days, or what I found is like a week later, I've almost forgotten that that was even a thing, it's the ones that kind of are sitting out there. I keep thinking about it. I keep writing about it. I keep kind of from my side improving the idea or improving like how I would do it or whatever. Then eventually I'm like, okay, do I have the resources to do this? Does it make sense to pull resources off of something else? How do we do that? And so I think it's just this vetting process of like putting it in a queue and seeing if you continue to want to do that or if it just goes away and something else pops in its place the next day or the next week.
Yeah, that's a good answer. Yeah, because I have the same problem sometimes. Like, because you have so many different things and people bring up so much stuff. It's like, I can't do it all. And then if you get involved in something bad too, it sucks you for like a month or two until you find out that it sucked. Like you shouldn't be involved with it. So yeah, if you do put that process in, it's like, think about it for a week or whatever it is, write it down. It's a good. Yeah, I was just curious what you think on that stuff.
Yep.
So you were flipping houses and then you decided to get into, because you do really fairly big stuff now, like the apartment complexes, things like that. What made you jump into going that route and thinking you could even do it? Like single families are a couple $100,000 versus those are a couple hundred million or a million or whatever,
Yeah. Yeah. For me, when I look back now, it's easier to look at hindsight and say like, how did this happen? Right. So for me, I would say wholesaling and rehabbing. It's changed my life for sure, but it was always a means to the end of if I do some of that, then I can afford to keep some as rentals. Right. So I'm kind of doing this active business that enables me to keep some long-term stuff, which is really what I wanted was mailbox money. Now you have rentals too, and they're never that passive. Right. But as passive as people would lead you to believe when you're first getting started, at least. So we built up a pretty decent portfolio here in the Dallas market. And then my active income, just because I have other businesses that evolved over time. Like I have more active income than what I need certainly to survive. Right. So it's like, okay, but I can't buy single family houses fast enough because it's hard. They're very transactional. Like each one is a new deal. Each one's a new deal. Right. So I knew I just needed to do things with more zeros behind it ultimately. And for me, it was multifamily. We've actually dabbled in, we've done some stuff in self-storage as well, but just more commercial type properties that are just bigger. That the big thing is too, even for us with single family, we have a property management company and not taking anything away from them, but there's still parts that we deal with too frequently. With multifamily, we're dealing with, typically 100+ door properties, sometimes way larger than that. And there's professional grade property management that manages it to the point to where you don't ever even need to go to the property. Like it's just handled right. And so I think, and it's the same way for businesses. Once you grow up to a certain point, you have resources to hire management and people to do the things that you don't want to do. And we kind of saw for us multifamily as a way to truly be in that kind of what Robert Kiyosaki would call the I box, right? In the cash flow quadrant. It's like I'm in that lower right quadrant where I'm an investor and my money is working, but I don't have to do anything, for the most part for that.
Yeah, it's the goal. That's where everyone wants to get, right?
Yeah.
So, okay. And then on those things too. So like big multifamily stuff, don't you put together like a team? Like it's not just like a one-man thing. Like how do those work?
That's the cool thing about it. So truthfully, I'm a GP in quite a few deals now, and none of them are deals that I found. I just came on as a general partner usually to help raise money, put some of my own money in. And so that is one cool thing about it is compared to single family, it's very much team based. So you've got a deal sponsor, you've got somebody that's probably an asset manager that's at least managing the property manager. You've got several people that helped raise money. And so it's very much a team based approach. And you got the person that found the deal in the first place. And so it's pretty common that people, because even in Investor Fuel, we call it the cash flow group, but it's a multifamily group of investors that truthfully at this point, we've got a new deal that somebody in the group found. I'm coming on as a GP to help raise money. It's $41 million purchase price. Exciting. It's first deal for this person. So she was a single family person and doing multifamily now. So that's exciting. Those are big deals, right? But the first thing, like the proverbial dog that catches the bus when you when you've never done a multifamily deal and all of a sudden you get a $41 million one, you're like, what the hell am I going to do with it if I catch it? And the first thing you do is build a team out to help you get that done, because it's complicated, especially if you haven't done it before.
Yeah. So that's cool. So anyone in the space, so they come across a $40 million deal that they could buy. They don't think they could really do it. Like, they could reach out to you, right? Say,
sure.
hey,
Yeah. We have a process where, we can kind of vet deals, and it's interesting on the multifamily side because, in the single family side, it's not uncommon for people to find a deal and have somebody else either help finance it, help rehab it, help with something, where usually the person that finds the deal, it wouldn't be uncommon for them to get 40 or 50% of the deal. On the multifamily side, it's more common for them to get maybe 10 to 15% of the deal, because all the other components that come from sponsoring it, being like personally liable. When you're a GP, you're personally liable for the loan that you just took out, right? There's a lot more risk in it. So the hardest part is not finding the deal. The hardest part is pulling everything together to get the deal done.
right.
But for sure, yeah, there's a lot. That's the cool thing about multifamily as well. I think you were talking about this right before we started, is people sometimes are like, that's such a big deal, I could never do it. It's like, effectively just find some people that could execute the pieces you can't do. Like, maybe you can't raise money, or you don't have, anybody in your circle that you think you could raise money from. Then get good at finding deals, and you'll be of value to the people that can raise money. And then as time goes by, you'll learn how it works, and then you can play, more kind of positions on that team, if you will.
Yeah. Pretty much surround yourself with the other people that are strong where you're weak.
That's right. Yep.
Okay. So that's good. And then same thing too. I know some people are like, oh yeah, I want to get involved with real estate, and I got money. So same thing. And they don't know anything about it. Like, they could kick in cash and be part of the deal, and they don't really have to know anything because of the team.
That's right. Yeah. There's always ways to partner. I mean, real estate is actually, even on the single family side, is a great business to partner in, because there's always like the front end and the back end. There's like acquisitions and marketing, and then there's kind of dispositions and kind of exiting the property. So there's a perfect way to kind of split that up. That's why there's so many people that are partners. I mean, my wife and I have been partners. You partner with your buddy. And so there's just ways to do it that, the truth is in the single family space, especially, what's difficult is the average real estate investor is a solopreneur, or maybe a husband and wife team, or two brothers, or father, son, like small teams, right? But they force themselves to get good at everything: marketing, sales, operations, all the bookkeeping and accounting and finance side, selling a property on the back end. So you might have to get licensed. If they're managing properties, if they're managing rehabs, all of a sudden they're a GC. So you take like a couple people and you say, hey, I need you to just be good at everything, which is hard to scale, right? And that's the case in certain areas, partnering with people. In certain instances, finding people to handle the things you're not good at, like you guys do with lead gen and we do with lead gen. And just, finding a way to outsource the stuff that you don't like, and you're just probably not ever going to be as good as an agency, somebody that does this all day for a lot of people, right?
Yeah. And you're so right too. Cause you can't do it. You cannot scale if you do everything. And
yep.
It's funny. I was talking with Trevor over at Carrot. We were talking about how to find people. And I thought it was really interesting. He said, hey, get a list, write down all the stuff you really like doing, and write down all the stuff that sucks. And then go find people that do the stuff that you think sucks, because there are people out there that's their thing that they love doing.
Yeah, it's true.
And they'll do it way better.
That's right.
So yeah, there's people out there. So that's an interesting thing you brought up. So on the marketing side, so you have Investor Machine, right? So what all do you guys do there, and how do you help investors on that side?
So our end product is something not real sexy, which is direct mail and skip tracing if folks want to cold call and text message. But really where we differentiate ourselves is on the data side. So, there used to be, when I first started 14 years ago, you could almost just mail to age and equity lists and do fine, right? The margins are so high in this business that they would offset the fact that you weren't a great marketer. But we're at a point now where it's a challenging market, like lack of inventory. It's a challenging market from the standpoint that everybody and their brother is a real estate investor now. And, there's just a lot of challenges. So it's like, you can't afford to just throw spaghetti at the wall and see what sticks anymore, right? So what we've kind of found is what everybody would really like to have is a list. This is not this is not a list of what I'm saying it is, but it is a list of like all the houses that want to sell next week. They're distressed. They want to sell at a discount. And you're like, go get them. This is your job. Take this and go buy these houses, right? That's what everybody wants. But that list doesn't exist. And so the best thing you can do is try to estimate it, like try to get close to it. And the only way that we really know how to do that is to look for distress, like look for data points that would indicate that they're distressed and might be ready to sell and might be willing to sell at a discount or even have the ability to sell at a discount, right? So what we do is we go into county courthouses and cities and we mine for data. So we're looking for about 40 different lists from probates, tax delinquent, notice of default, mowing liens, arrest records, divorce records, IRS liens, on and on and on. And so then we put that in some list stacking software that we built that really does kind of stacking on steroids, and it scores every data point. So a probate has a score, a mowing lien has a score, for example. And then we kind of weight all those scores together for a market, let's just say Dallas County where I am. And we find out if you're going to market to folks that fit. So we do an overlay, like we kind of have a buy box on the types of houses I want to buy in the first place. So we can target, there's about 15 different things we can target, from ages, price bands, lot sizes, on and on and on. How many beds, how many baths, all that stuff. So we do an overlay so that first off, our customers are only marketing to the type of houses they want to buy in the first place. And then we use our data to see who is the most distressed and most likely to sell soon. And we market to those from top to bottom. So however big their budget is, we can keep going down the list to stuff that is a little bit less motivated, but still has a decent chance of selling. So we just really try to, I won't say it's a laser approach. It's more like, buckshot, for those of you that know what that is. But it's not a shotgun approach. Like, we're not just shooting stuff out there and hoping that something hits, because most real estate investors just can't afford to do that anymore. And then the fact that we execute it for them, just like you do for your clients, allows them to make sure that it gets done in the first place, right? There's a lot of real estate investors that, as we just talked about, are wearing all these hats and they're focused on rehabbing a house, and something just happened over there and they're dealing with that. And next thing you know, 2 weeks later, they forgot to send their mail out, right? Or whatever. And they're like, oh crap, I forgot to mail that. And the next thing you know, they're in a hurry and they just send it to the same list they sent it to last time, even though some of those houses have sold. Some of them have said, take me off the list. Some of them have had return mail come back as undeliverable, and they just start wasting money on stuff to try to be quick, because it was an afterthought for them, right? They're just trying to do that and everything else too.
Yeah. And you know what? That's really important too. Like, I used to do mailers, and I would mail to non-owner occupied, like owned for over 10 years, stuff like that. But once you get data like you're talking about, you can compile that on it. Instead of me mailing to 2,000 people and paying a postage on that, you might be able to mail to 500 people, or whatever it is, whatever the percentage is,
yeah,
which can get you a really high return, because you can spend the same postage on what you wanted for the 2,000, but get like a way better return on that kind of stuff. If that even makes sense.
Yeah. The goal for sure is to try to cut out waste, so we're not sending to people that you shouldn't, and to try to market to the houses you want to buy in the first place. Because a lot of people they know, like in certain parts of town, like, man, I love getting deals over there. My returns are like 3 times higher. Well, the ARVs are probably higher too, right? Versus like the south side of town, which is the hood. Like, I'll take it down there if I can get it. But they might make 4 or 5x in a specific suburb than they do like in the hood. And in the hood, they're just going to wholesale it and try to get rid of it as fast as possible. In the suburb, they're going to rehab it and squeeze all the juice out of that fruit they can, right? And it's like, so our system allows them to, like, let's target the areas where you make the most money in the first place, right? I mean, then you could even justify spending more on advertising. And so, a lot of like guys like Russell Brunson and some guys that teach marketing, like at the end of the day, you want to know how to win, figure out a way to spend more than anybody else, but justify it with higher margins and stuff like that. And, we're not saying just throw money out the door and be wasteful. We're like, let's be efficient about it. But if you really want to grow your business, then let's find ways to make it as efficient as possible so you can do more deals and ultimately start to buy your time back.
Yeah. And that's really interesting too. I don't know. Have you ever heard of Hyros?
Yeah.
So yeah, it's interesting. Like on a digital side, we'll do similar kind of stuff. We're looking at traffic and like segmenting and all that kind of stuff. So, and it's really important because you can look 80% of your ad spend's wasted and 20% is good. Same thing on your side. You can cut all that waste out, and then you can scale up really, Really nice. So
Yep.
yeah, it's really interesting there. And then like your target, like who is a good client? Like what type of people do you guys work really well with?
Yeah, we're really looking for not new investors for Investor Machine. We're really looking for experienced people, ideally those that are advertising enough through us to get a deal or two a month, and just people that are taking it seriously. Because some that have low budgets or every other month they don't have money for marketing. That's not really our customer. We're looking to be consistent and build long-term relationships with folks.
Yeah, and that's important too. Yeah, just because if you're doing a couple deals a month, just outsource it to the guys that know. Like I sent a mailer once. We were testing. Chad had the idea. He's like, "Hey, let's send something real fancy out." We spent a 5,000 piece mailer and we got 0 phone calls. And we sent a yellow letter. We got calls. So and the point of that is to work with people that know what they're doing. Like
Right.
let them tell you, "Hey, this mailer works. We've already tested it. Don't go waste your money testing this stuff." It's one of the values Mike brings because you can work with him. He knows how to get the data. He knows what types of mailers are working, which aren't, because they're doing it all the time versus just trying to figure it out and go into like one of those other companies. Now, so now you got Investor Machine and then Investor Fuel.
Yep.
Talk a little bit about that.
So early, like a couple of years into my business, I had probably, because we actually ramped up pretty fast our first full year in business. So kind of calendar year 2009, we started in the back half of 2008. I think we did about 65 or 70 deals. So we ramped up fast and we're kind of a high volume shop. So after I'd done about 100 deals, people started asking me, "Can you show me what you're doing? Do you do coaching?" And I'm like, "I don't know. I don't know. What even is this, you know?" So next thing you know, I'm a coach and I'm coaching like lots of people, and to the point to where I was coaching hundreds of people. Like that grew pretty fast. But what I realized, and I have a soft spot for newer people because I was there and I appreciate that. There's a lot of, but I say this, it's harder for me to help somebody get from 0 to 1 deals because of all the mindset issues they have. You know, does this really work? Does this work in my market? My family thinks I'm crazy, like all those things. Than to get somebody from doing 30 deals a year to 100. Like just because they know it works, they're just looking for, how do I scale this? How do I build this up? Right. So, in the process of me, so I used to do some like rehab seminars here locally in town where people would actually come out to houses that I'm rehabbing, and we'd get like 30, 40, 50 people out there just walking through a rehab, and we're telling them what we did and stuff like that. And that's kind of how I fed my coaching program. And then ultimately I wanted to kind of go outside of the Dallas-Fort Worth market. So I started doing some stuff online, and that included starting my podcast. So my first podcast, Flip Nerd, that we still do today, actually we're turning Flip Nerd into a podcast network right now of a series of additional shows with different hosts and stuff. That's 8.5 years ago we started that, and we've done over 1,500 podcasts in that time. But my very first podcast, and the way that the podcasts I enjoy the most are this style, what I'll kind of call expert interview, right? I'm interviewing other people that have done some cool things and learning from them and getting to know them better. And so after I started doing my podcast, I started meeting all these like amazing people. So by the way, when I first started my podcast, there were like 5 or 6 other podcasters, you know, at that time. That was it in the real estate space. And now there's hundreds, which is cool, but it was a small world. And so I was able to get a lot of amazing people on the show because it was a shiny object at that time, right? And so I started to meet some really cool guys like Trevor Mock and, you know, Matt Andrews and people like that. And all of a sudden I'm friends with these guys, and I'm like, you know what? I really enjoy more of the peer-to-peer type stuff than necessarily teaching brand newbies like how to get started. And so I was like, well, how do I get around these guys more? And it's just decided to, you know, start my own mastermind. I had been in some other groups and things, learned a few things, and kind of had my own spin on how I wanted to pull this off. And that was the beginning of Investor Fuel about 5 years ago, was to just kind of take my network and try to find a way to surround myself with them a lot more frequently than a periodic podcast guest, you know?
Yeah. And the cool thing, like with Investor Fuel too, is it's not a seminar. Like you go there and there are different people with different strategies and different success in the room, and everybody's sharing that stuff. They're sharing their failures, sharing their successes. And that's important too, especially like with the new people, like guys just getting in the business. Like you said, headspace. I talk to so many people like, hey, you're lucky, this, that. How do I get into it? It's like, you're in your head. You just have to do it. Like, just Number one, go surround yourself with people that can do it, and then jump in the pool. So being in groups like Investor Fuel, in the room, there are some people just starting out that the people that have been there can help. And then there's some people that are just getting ready that are looking for those guys. So it's a cool atmosphere.
Yeah, I think, and our culture is such that we really tell people to kind of check their ego at the door and like just be a person. I mean, I know some people that are doing really high volume, and sometimes, I have a peek behind the scenes. Sometimes they're in the process of getting divorced and their life's falling apart and there's other things going on, right? So even some people that we see on social media, because social media isn't always real, that look like they have amazing lives and maybe they've accomplished a lot, they have other parts of their life that are struggling. And so, part of our culture at Investor Fuel is like, hey, our businesses are to fuel our lives, right? We're doing these things to live a better life, give our family a better life, have a bigger impact. So like, let's look at everything everything around you, not just your business, and celebrate like how to improve everything. Right. So it's a place where people kind of, like you said, get vulnerable, share what's not working and challenges they're having. And I kind of refer to it as my second family. And I think a lot of people look at it that way. We travel together. There's a lot of, amazing friendships that have been created there for sure. And so it's a pretty unique community, and, definitely glad that you're a part of it.
Yeah. So that's cool. So you can help people pretty much in multiple ways if they want to get involved with real estate then. So like guys that just want to get involved in real estate and start getting in there, they can get involved on that side. Guys that are crushing it that just don't have the time, they want to trade their money for the time, you can help them with the mailers and list all that kind of stuff. And then guys that got deals or have money that just need a team, you can help them on that side too.
That's true.
Pretty cool.
Yeah.
Cool, man.
Yeah. When I started doing more multifamily a couple of years ago, Corey Peterson is one of my best friends, and we've been friends for a long time. And he had a mastermind it was a small one for multifamily investors. And then over the years, we just, talked about it and decided to kind of merge them. So under the Investor Fuel umbrella, now we have our single family groups, which are the largest. And then we have some multifamily groups now for people that are, and honestly, most people in the multifamily are people that are transitioning out of single family. There's very few people in there that are just starting real estate from scratch and jumping into multifamily. Most are transitioning from some other class.
Yeah, that's cool. And if anyone's thinking about getting involved too, because you have the different groups, gold and platinum, right?
That's right. Yeah.
So it's nice too. If you're starting there, there's a group for that you can give you those things that you need there. But if you're past that too, there's a different group, platinum, that has people that have been in it, that are dealing with different troubles than the people that just started.
Right. Yep.
Yeah, cool, man. What else? We miss anything, or we go?
Let me check my notebook. No, that's most of it. I'd say, at this point, one of the things you said about shiny objects that helped me too was when we went through. So this is probably about 5 or 6 years ago. We went through an early version or for us, it was an early version of EOS in our business, and having some structure around meetings. What are the KPIs that we're focused on growing? And it was an opportunity for me to kind of anoint my team at the time, several of which are still here, like to say no to me, right? Which I'd never done before. I was like, look, if it's off track and we shouldn't do this, like just say, hey, good idea. Keep thinking about it, and we'll talk about it at the quarterly planning meeting, but that has no role here right now, essentially. Right. And so what I did with that is I said, okay, I still like to kind of get creative and come up with new ideas to fix stuff or build stuff. And so I just do it inside of the bounds of what I'm already doing. So rather than go do something totally new, I'm like, what can I do inside of my business that's innovative and almost like a business within a business? Like it could be a new product or something else, right? But it's still not like I'm going to go over and start, mining for silver in Siberia or something. I'm just like, this is what I do, just inside of the box. So anyway, I tried to like innovate inside instead of having to go outside and do something like totally different.
Yeah. You know what? That's a really good point too. Like people need to hear that. I have the same problem. Like me and Chad are always bouncing ideas. I'm like, dude, I have a problem, which I'm a little more structured. It's like, hey, you need to focus. You can't be good at something if you're not focused into space. But like we're in the real estate investor space. It's like we can do different things here. Like our goal is to help investors get deals, whether it's through digital market, whatever, whether it's through using your mailers. It's like, okay, I consider that the space, not just Facebook ads or digital. It's like, okay, in this space, we can come up with different things that help, maybe CRMs or whatever, but we're not helping lawyers with their marketing. like
Right.
totally different stuff,
Right.
you know? Yeah. So that's good stuff. Yeah. Well, what else you got? We pretty good?
We're good, man. I'm excited. I don't know if you've told anybody yet about you're going to be joining us to speak at Million Dollar Meeting.
Right.
That's something that's cool. And that was kind of an innovation inside of what we do. So we have this event, actually going to have an event coming up in end of August that we have like 20 expert speakers at, and excited to have you there. And we just bring together a bunch of experienced investors, and it's just like a crazy like networking opportunity with a few hundred people there. And so Trevor Mock, this is my 4th year doing it, and I brought Trevor on as kind of a headline sponsor with Carrot, and so it's kind of sponsored by our businesses, but we bring in a bunch of amazing people like you that just share a ton of value, and you can't leave there without feeling like you're just a lot smarter, and the networking is just insane.
Yeah, that event's I'm excited about that. That's gonna be pretty fun.
Yep.
Now, do you have a website up for that?
So it's I don't know what your link will be yet we'll have a link for just for you,
link,
but
yeah.
it's milliondollarmeeting.co is the website. So
okay, cool.
.com was already taken.
Yeah, we'll put it in the show notes. Yeah, anyone who's interested in attending that'll be cool.
Yep.
And then how about if people want to reach out to you for like Investor Machine and Investor Fuel? What's the best way to communicate?
Sure. Yeah. Our process for both of those is to go online and get a little bit of an understanding of what you're looking at. Investor Machine, we actually have a short video to kind of tell you a little bit more about how the process works. And then for both of them, you can schedule a call and talk to our team and see if it's a fit. But we do have dedicated links for you, Bryan, because I wanted to make sure that we know if anybody hears this, they're coming from you. We'll take good care of them. So it's investorfuel.com/eat, sleep, invest, or theinvestormachine.com/eat, sleep, invest.
Nice. Okay, cool. And we'll put all those in the show notes. So yeah, if you guys are listening to this or anything, just check out the show notes, or if it's on YouTube, you can just click the links there. Awesome. Hey, well, Mike, yeah, I appreciate you coming on. This has been good. We're gonna have to do this again. There's a lot we can talk
for sure,
about.
Man. Thanks for the opportunity. I really appreciate it.
Yeah, sure thing. Hey, and everyone listening, thanks for listening. Yeah, go out there and crush it and close some deals.